Welcome to an overview of SOX sections 301, 302, 404, and 906. Most people, when they think of SOX, they think of the internal controls testing. What they don't realize is SOX has many different provisions. There are four key ones that I wanted us to focus on because that's where many companies focus their effort and has the most consequences. So there's the 301 whistleblower hotline, there's the 302 disclosure controls, 404 internal controls, and 906 accurate financial statements. And we even show you an example of a signed 906 certification. So on one page here, I've given you a summary of the four key provisions, just in case you want just a cheat sheet. But we're going to go through each of these in a little more detail, and you'll notice that in future blogs or other trainings, we really zero in on specific parts of these provisions. But this is an overview. So what is SOX Section 301 about? It requires companies to set up procedures for the confidential and anonymous submission by employees with concerns about questionable accounting and auditing issues. Who owns the 301 whistleblower hotline? Usually, this is legal. Legal owns the process so that you have client attorney privileges in case the whistleblower and the company needs legal protection. Who can you use to set up the hotline? There are many outsourced whistleblower companies available who set up dedicated toll-free numbers and email addresses to gather and route incoming complaints. You will need to set up the call routing decision trees based on the severity of the complaints. What I mean by that is if you have a complaint about, you may receive complaints ranging from dirty kitchens to unfair treatment from your bosses. Remember, this hotline is for employees to report concerns about accounting and financial reporting matters. So if you get the dirty dishes in the sink complaint, well, that's not really high priority. So a decision tree, you may decide that all calls and complaints received will go to the general counsel and the audit committee, or maybe just the general counsel and the chair of the audit committee. Those are decisions that you can make, but once you make those decisions, the complaints get routed that particular way. And what do you need to keep track of this? You will need to keep a log of the issues that were reported and their resolution. You will also need to periodically report this to the audit committee, to the wider committee, or to the board to say, we received 2 complaints, here's how we dealt with the complaints. And as SOX consultants, we often phone or email in phony accounting complaints just to test that the whistleblower hotline is working the way our clients say that it's working. So what is Section 302 CEO CFO certification? Section 302 requires the CEO and the CFO to evaluate the design and the operational effectiveness of disclosure controls. So that includes internal controls and procedures. Now the CFO and the CEO will sign a certification in the 10Q or the 10K related to these controls, and we actually will have a separate, more detailed training on 302 itself and how you set this whole process up. What are the requirements for Section 404? There are 2 parts. Part A requires management to document controls and assess the effectiveness of internal controls over financial reporting. And Part B requires the external auditors to test the internal controls over financial reporting. Under the Jobs Act, emerging growth companies are exempt from 404B for the first 5 years. Remember, though, that EGCs still need to document assess internal controls annually, Part A. For accelerated filers or non-EGCs, the attestation or Part 404B is required the first complete fiscal year following the IPO. Now, early compliance is important to ensure the accuracy of the IPO offering document because implementation of internal control procedures can reveal material information and affect the reporting compliance after the IPO. And this can be a big effort for hyper-growth companies because of the changing processes and procedures that you need to accommodate the growth of the business. Don't underestimate this effort because your accounting team already has a full plate running the business. So start preparing well in advance of your first filing, your S1 filing. Also, implementation costs can be significant. They range from $150,000 to $250,000 depending on your business. So you should reflect that in your budgets and your forecast. What about Section 906? So 906 requires the CEO and the CFO to certify the financial statements are accurate and complete, and it also has criminal penalties if you certify and your financial statements have fraudulent or misleading information in them. And under 906, the penalties can be upwards of $5 million in fines and 20 years in prison. So that's why most CFOs and CEOs are so concerned about their financial reporting. And so here's an example of a certification that's signed, and this is publicly available. It's usually an exhibit in your financial statements, and the wording is exactly this way because the SEC says it's exactly this way, and you'll see here the CEO and the CFO have signed it. So that's it on the certification. So whenever they say certification, it basically means sign on the dotted line. That's it, and we'll talk to you in the next session.